Welcome back to the channel. My name is Brad, and cover calls really stink. They do. The market's down, but there's other assets out there that do better over the long term for income investors. And we're going to talk about that today and show you the actual charts and data so you can make up your own mind of what you want to do long term income wise. Not financial advice, legal advice, or any other advice. Just Brad, retired, on the internet, giving you his opinion and the charts and data. If that's what you're looking for, stick around. So today we're going to look at business development companies. Yes, business development companies. And I ran a test. This is the parameters. A 0.67 monthly withdrawal rate. Gives me an 8% annual rate. I took these business development companies because I could, and I put them against SPYI and SPY. Yes, I hold SPYI. So I was very curious at how it stacked up. So I wanted to see this over time, and I took a 3-year view, but SPYI has not been around for 3 years. So I ran it again against SPYI for the amount of time that it's been out to give you that 2.5 year worth of data so you can make your own decisions of what you want to do. But let's take the first look. If I took SPY, and I invested $100,000 and I took my 8% annually, I come up with 107,623. So that's the benchmark. That is where we're at. And if I took Trinity, Hercules, and Blue Owl Capital, and I took my 8% annually, well, guess what? After 3 years, you have more money. So for those people that keep on saying total returns matters, maybe you're invested in the wrong asset classes. Maybe if total returns only matter to you, you should sell all your SPY, all your cover calls, and buy only business development companies. That's bad advice. That really is bad advice. But you should probably hold some business development companies. Looking at annual withdrawals, you can see annual withdrawals went up over time for all 3 funds, including SPY. That is very interesting. Now, I take my annual withdrawals on cost. These are taking annual withdrawals on worth. That's the difference. If I look at portfolio income, you can see which ones produce the most income. Yes, Trinity produced the most income, but had the least amount of withdrawals. Now, if I take these same philosophy and I take them against the other funds, ARCC, BXSL, and GDDC, you can tell that, hey, man, SPY is getting a whooping. What's wrong with SPY? That is not good for SPY, not at all. You can tell that over the period of time that, hey, these other funds may be something interesting for you to invest in. If I look at portfolio income, you can see again, it goes up over time. If I look at annual withdrawals, you can see how the withdrawals worked out for you. It appears that BSXL has the best annual withdrawals out of all the funds. Now, I hold BIZD. I chose a little while ago not to go into individual business development companies because I didn't want to be a picker of winners and losers. But now that I'm getting more and more comfortable being retired for longer and longer, and I have more time on my hands, maybe I'll start looking at these a whole lot closer and determining maybe I have a little more focus on some business development companies. So I own BIZD, and now we're going to talk about Maine and CSWC. And look at these funds. And you can tell from the chart that BIZD beats SPY. So why do you hold SPY? I don't know. And we all know cover calls don't do as well as SPY does. If I look at portfolio income, you can see portfolio income goes up over time. This, we're going to look at annual withdrawals, and you can tell with annual withdrawals, actually Maine, paying the less, actually has higher withdrawals. But that's again going on worth, not cost. So now let's put this on some graphs, because these charts, they confuse me even. I want to see this on a graph and do this graphically. So if I take the graph and I use SPY as my starting point, you can see all the funds that have beaten SPY with taking an 8% annual withdrawal rate. You can see which ones are higher and you can see which ones are slightly lower. But overall, you have a bunch of winners compared to SPY. So I said that I was going to compare this to SPYI, and I did. From September 2022 to February of 2025, I took my 0.67, which is 8% annually, and I graphed this out for you. And when I throw up the graph, wow, SPYI being on the left, and yes, everything else is higher. So why hold SPYI when you can get your 8% from business development companies and have more money in the long run? Just thought I'd throw that out for conversation. I really think that you should have diversity. I think you should. But clearly over the last few weeks, seeing the market go down and seeing how my business development companies didn't fall as much, I'm starting to get a little more curious about holding more percentage in business development companies. So how did this end up playing out? If I just picked some winners, I picked some winners out of this and I came up with, hey, they gave me an average of $123,000 compared to my $107,000 of SPY. Gives me almost 15% greater returns. And on average, it was almost 5% greater returns than SPY. And that's with taking a withdrawal every single month to give me my 8%, because I'm using 8% to live on. So anyway, that is very interesting how this all played out. But one question always comes up. When do you buy a business development company and when do you not buy a business development company? And what you should be looking at is what is called price to book. This is on Seeking Alpha. You can do the compare chart and you can go in and look at price to book. You're trying to find something below 1. Right now, ARCC is a little bit higher than usual because they usually float really close to 1, but you can see how these play out over time so you can judge when something is a good buy, maybe like Hercules, and when something is not a good buy. So hopefully this gives you enough information to start thinking about business development companies, and I will start doing more and more about business development companies. And of course, I'm going to build a tool for the website to have this out there so you can look at business development companies as something that you might want in your portfolio. So until next time, God bless.